where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
Yes, everyone. Welcome. Happy Wednesday to you all. How are you? What in the world is... We're going to do a little live editing there. Come on, man. Welcome to The Closing Beat, everybody. And it is Wednesday, actually. So welcome. I hope you're having a good day out there. We are financial advisors that don't really know a whole lot about cameras and stuff. So this is just... Now it's got to go that way. We try to put a different spin on things around here, and hey, it doesn't always go well. Ready? Ooh, okay. And so I'm going to try something different today. We're going to go over a couple different things, actually, and yeah, just not say the same stuff. You see the same stuff out there, the Fed raised rates and all that stuff. So we're going to go over that. We'll expand on it a little bit for you guys. And of course, if we help you in some way, we hope you hit the subscribe button. That's really all we ask of you. And just good faith marketing here, and hopefully you find it enjoyable. Okay, I don't know if you noticed, but when the Fed did make their decision, did you see the market fall in like a split second? Well, how could that be, right? It's the algorithms. That's how it works right around the Fed announcement there. And so what we have, go on over here. Oh, by the way, I think we'll be able to see your comments there as well. It just got to update, but that's pretty cool, huh? Look at that. Anyways, let's take a look here. So the S&P remaining in this little downtrend here. A lot of volatility wrapped around the Fed decision to raise rates by 0.5%, which, by the way, brings it in line. You want to see some spooky stuff? Let me come over here. Okay. This data will reflect tomorrow, so it's actually going to be up here just a little bit. But if you take your little eyeball and you go on over here, when was the last time the Fed funds rate was this high? It was really at the start of the financial crisis, that whole meltdown there. The gray area in the background is the recession. That's where rates were last this high. I mean, if you think like, oh no, last time rates were this high, we went into a recession and kind of the world, fell apart a little bit. Well, the good news is rates went down, right? So, put a positive spin on things there. So I guess that's the good news there. Nonetheless, we're sitting up here right about the 4% mark. And so just as a comparison, that's where we stand there. More importantly, what came out of today's news, the decision and all that, is what they refer to as the terminal rate. This Wall Street talk with these big words here. Terminal rate is probably self-explanatory, but it's where the Fed expects to stop and not go past. So they put it at 5.1%. Now that's confusing in itself. 5.1% really is 5.12%. All they're really saying there is we expect to stop when our Fed funds rate gets between 5 and 5.25%. See, what they do is they have ranges, and they never lock themselves into one rate. And so the range that they've set, the lower limit is 5, the upper limit is 5.25. You can actually plot that if you'd like. You can plot their upper and lower limit ranges there. So basically what they said is we have raised the point at which we think we will stop raising rates. Previously it was like 4.8, somewhere in there. They just went up a tick. That's all it is. So if you look a little bit deeper in there, the dot plot, remember we were talking about the old fancy dot plot and what all that means. The way it looks at the moment is that they will keep rates high through 2023. Then their goal is in 2024, come on back down to about 4%. Remember the terminal rate, the top they hope to get is about 5. So they'll come back down to 4 throughout the year 2024, and then come back to 3 by 2025. Since 1994, they've actually been transparent about how they do this. They've never once followed through with what the dot plot averaged out to be. So take that with a grain of salt, but just trying to help with some of the maybe little extra things you can sound smart in front of your friends. If we look at the S&P, it is now down 16% year to date. Statistically and reasonably, it's not going to be a positive year. You know what I mean? We got a couple weeks to go. Can we have a 16% rally? No, we can't. That's never happened before. especially in the last few weeks of the year. We've had rallies, but we've never had a 16% rally. So sorry to dash your hopes there. The Russell 2000 down about 17%, and I'd say the same thing there. We cannot expect the Russell to be positive for 2022. Let's just forget about it. Just a bad year. We'll put it behind us. The NASDAQ is by far the worst and has been the worst pretty much, or actually all year long. It's down 28% year to date, and I would make the same comment there. There's no chance the NASDAQ is going to have a positive year, so let's just all accept that for what it is. We look at the Dow. This is the best performing index out of the year. It is down 6.5%. Could we rally 6%? Before the end of the year? Is there a possibility that the Dow could be positive? Well, I'll show you real quick, and I'm going to make this a tiny little bit of a lesson for those of you that are research members. Let me just pop this out here. This is in our research site. You can do the exact same thing I am. I think Charlie's working on it, so if this messes up, we'll just keep trying. But we're going to look at the Dow, and I'm going to use the DIA, just a simple ETF, so you guys can do the same thing. Let's look back as far back as we can go here, and we're going to look over the years. And what I'm curious about is, now I don't know what the answer is, but has the Dow ever had a month where it was able to rally 6%? Now, granted, I'm looking at the whole month here, and in particular, has that ever happened in December? So here's the data, and let's do it like this. So these are the results. Let's sort by change. So we've got, can you see it? Yeah, you got October, November, October, July. Let's keep going down here. Anytime in December we've seen a big rally, it's not looking good. Here we go, 2003. Okay, we did have a 6.7% rally. So if we said, okay, let's just start from here, start from fresh and see where we're at, that would do it. So there is a December where that happened. Really just the one though. This would not be enough right here, this 1999. That wouldn't be enough to go positive for the year. So in other words, what you can see is, it pretty much, we're just probably going to finish negative. Is it impossible to finish positive? No, but it's not probable, right? It's just, let's just put that behind us as well. So I don't know, just a fun way to share that with you. Now, let's continue trying different things. There you go. So the S&P here, broad sell-off today, by the way. If you look around, there was no positive area really of the market, and I'm talking factors here, like was there a small cap index positive? Was small cap value, large cap growth, mid cap growth? None of that was positive. Large cap growth was actually the worst, but so was the value stocks in the small cap area there. Large cap growth down about 0.75%. Same thing for, let's just say the same thing for small cap value stocks there. Now, remember, there's a change in the market. We talked about this in sort of sarcastic repetition, that stocks that are buying back shares, well, that's what investors historically want you to do. Remember the chart I shared with you? I don't know if I still have it. I'm pretty sure I do, but we like to see companies use their money to buy back shares. Investors reward that. Do I have to go back and explain? I don't have to do that, right? Let's not do that. If you need me to, I'll come back at the end and I'll find the chart, because it is there. I just spotted it. But is that true? Is it actually happening now? And I've touched on this a few different points. We're going to try something a little different today. Let's do it like this. Here's the 3-month performance relative to the S&P by what's known as factor in the market. In other words, like we just mentioned a minute ago, small cap value relative to the S&P, large cap growth relative to the S&P. So the returns that I'm going to spout out here, and you can see on your screen, are relative to the performance of the S&P. Doesn't mean they're positive. It just means it's not as bad in a year like this. So one thing I want to point out is in the last 3 months, what's the best performing place to have your money? Broadly speaking, you know I can't recommend individual stocks without the SEC breathing down my back. However, I suspect they're a little busy right now, FTX. Look at here, we got buybacks. If we were to build a basket of every stock that's currently doing buybacks, maybe we can make a video out of that or something, put it in the research site, 6.1% better than the S&P. That's not enough for you to have a positive gain on the year, but in the last 3 months, if you recognize that same thing we were talking about, well, you're outperforming the market by 6.1%. So is that good or bad? If you, like in terms of the economy. So do you think by looking at that you could say people are optimistic or not optimistic? Now we can put the two lessons together and we can say, if companies realize the economy is slowing and they choose to not buy other companies, not expand, not spend money on R&D, but they instead buy back shares and pay dividends. Okay, so they're not very optimistic. If investors chase that money, that means they're not very optimistic either. So it's not a good thing that we see this outperforming. So don't think like, ooh, holy grail, let me go invest in stocks that do buybacks. This is probably temporary. So nonetheless, they are behaving as if the world expects the world to slow down, right? High dividend yielding stocks. Well, that's beating the market by 5.7% over the last 3 months. Is that good news or is that bad news? Well, that's also bad news, right? Where do we go when we think the world is maybe not as safe as it should be and the economy slowing down? We say, I realize I won't get the growth, but I'd sure like to get the dividend. That is a pessimistic investment. So that's not a good sign there either. And in the middle here, looking at the various factors of how you could invest in the market, large cap value and mid cap value. Is that good news or is that bad news? That's actually, what do you call it? Chasing yield, not yield, that's chasing alpha. So that's people saying, I get it. Most of the time, value stocks are a bit of a long shot in terms of beating or outperforming. But right now, that's what's happening. I'm going to go chase that. That's all that is. So we really have a lot of negativity here with the leading factors in the market, which I wanted to find a visual way to share that with you. One place you're probably happy or not is in IPOs. IPOs have had a really rough year. They obviously were considerably overvalued and such. And there's actually only one IPO that happened this year, if it even happened yet, actually. I forget the name of it. Maybe Cody could search for it. It's a electric bike maker out of California, and they're doing an IPO. Cool bike. They have a bunch of cool looking bikes there. But that's it. So if you invested in IPOs this year, or what was it called? Sondors, that's it. Sondors? Yeah, that's the one. So they're going public, and not bad, right? The bikes don't look too bad if you're into that kind of thing. But other than that, there wasn't much to choose from there. So I hope you didn't find yourself chasing IPOs here this year. Let's move on. So we've got crude oil, a little bit under the headline news today. Crude oil getting a continued bounce there, getting a little moral support, I should say, from OPEC and our energy agency, the IEA. They both agreed with each other that demand in 2023 would be a lot higher than 2024 or 2022. So what does that mean? Well, you can put the pieces together kind of quick and go, I see OPEC's cutting 2 million barrels a day, and they didn't change their mind. Nobody said anything different. So if there's more demand and less supply, prices go up. Add to that what we were talking about the other day with oil and Brent being in contango, if you watch the Jazz After Dark there, that has since slipped into what's known as backwardation, which just means that the price that you can get for oil today is more than you can get tomorrow. That's a really simplified way of saying it. So what does that mean? That means that if you have the ability to buy, or you are currently storing oil, or you need to sell oil, are you going to sell it later, or are you going to sell it now while the price is higher than the future? You're going to sell it now. So that's good news maybe to keep our oil prices down, because there's a lot of oil storing going on. And so the fact that it went from a period of time where they got less money if they sold it now, more money if they sold it in the future. I get that you can hedge and all that stuff, but you get where I'm going with this. If you had a barrel of oil and you knew that it was worth less right now, but you can see it's worth more in the not too distant future, you just hang on to that barrel of oil, don't you? You say, well, I want that price. I don't want this price. Well, now that that's changed, now you can say, oh, I can get more right now? Here, take my oil. That's fine. You can have it. What happens? Oil floods into the market. So it's a really tough time for you to look at this and say, this is the bounce that takes us back to $100. It's not likely, even with the OPEC cuts out there, because you've got a bit of a tug of war happening there. So a little different explanation than you're probably, used to hearing about and stuff. But with a simple, I make it simple, right? Kind of. All right, let's move on. Stocks in the news. Tesla making new lows. Investors are continuously getting a little bit worried about the amount of time Elon Musk is spending on Twitter and it's really not the amount of time he's spending. We all know he works like a dog, right? But it's the amount of it's the public persona of what he's doing. You see him talking more about Twitter. He's focused more on that. He banned the guy that tracks his plane, right? Yeah, it's his company. So he banned the guy that tracks where his plane is flying and all that. And so Tesla investors are like, we're noticing a little bit of momentum being lost here. All we hear out of Tesla is you're cutting the prices. Production's going to be a little lower. Maybe not sell so many cars in Shanghai. Oh, we don't want to hear that. But would that be the same if Elon Musk was focusing 100% on Tesla? So that's just probably a temporary thing, but that's kind of what's going on out there. And what's odd about it is he can even track that on Twitter. So he can see that people are concerned about that. What he does, I don't know, but that's what you have going on there. Delta, these guys were the latest to adjust their projections on future demand, and they spent a little bit of time talking about internationally as well. They were using that to sort of prop up some of the not so good stuff that they said about stuff in the States here. Nonetheless, it worked out. It was pretty good. Moving on. You got Smuckers, one of the better performers out there. I don't know. Like, it's the last stock you'd probably think of, but it's positive on the year. It's had a great run off the lows. It is way outperforming the stock market. And they said, hey, everything Wall Street that you think we're going to do next year, we agree, and that's all good news. And so the only reason I think the stock didn't go higher is because it's already gone higher. You've already had a lot of money chase that stock. So good for you if you like some Smuckers there. Amazon, new lawsuit. Where was that? From Vietnam, maybe? There's a new lawsuit out of Vietnam. It wasn't a lot. They're claiming they broke a contract, a manufacturing or a warehouse contract. Okay, it was $280 million, but that's not really enough to move the stock today. Just kind of weak overall with the Fed announcement there, but it was in the news, so there you go. What else do we have? Jabil. You familiar with Jabil Circuit? We are. If you live around here, they are the bigger name here. In fact, at the airport by our office, they have their own terminal. Now, they're doing well, so they can afford this stuff, but they have their own terminal, which means they have their own parking spots. Like, you pull up to the little side over by the private pilot area, or private airline area, and it says Jabil. And then you go around the corner, and they have a Jabil lounge and everything. But that's not what they do. They don't do anything with airplanes. They are a circuit manufacturer, and of course, all the little widgets and electronics that Doug could explain a little better for you. But they are coming up in the news tomorrow because, well, we hope their earnings are good. It appears it's going to be. But if not, well, then what are we doing with it? And actually, at another airport down south, they have the entire hangar, and they paid to have the taxiway over at this airport extended all the way to the hangar. They personally paid for that. You know, good problems, man. It's good problems to have. Nonetheless, they beat on earnings most of the time. 73% of the time they beat on earnings. 78% of the time they beat on sales. You're expected to hear of a slight slowdown there, but they have enough of a backlog at the moment to make that to make up for that. That's what I expect to hear. And margins should stay the same as they are. They should not be adjusting there. So those are the little key things that could pop out that would be bad news. I suspect you won't hear that. And they are higher on earnings 6 of the last earnings reports. So, you know what I mean? They're performing. And if you're performing, you get to have your own lounge at the airport. It's pretty cool, honestly. Anyways, tonight on All That Jazz, there was someone on YouTube that said, man, I'm going to be really upset if Dustin don't have a secret speakeasy in his house. So we're first going to talk about what do you do if you can't save enough for retirement. That happens, right? What if you can't meet your goals? What do we do about that? Do we just send you on your way and wish you the best and you go live on the streets? We're going to talk about that. And then if time permits, I will share with you why what you see on YouTube with me is what you get. There's nothing that I do that I haven't shared with you guys. And of course I have a secret room in my house. Like, why would I not have a secret room? That's total jazz vibes, man. So I'll give you a little hint as to where it's at and show you what it looks like there. Anyways, for the meantime, I will take your questions here. And does it work or no? Oh, you know why? I know why it doesn't work, because there's a separate window open. The old window's open. I opened the wrong window. That's totally my fault. So there's actually the old chat and the new one. So let me just pop this out here, and I'll see what questions you have, and we'll be on our way. There we go. Nice. Okay. What's going on out there? What's true? So MW's like, well, yeah, you're going to give them a hanger that doesn't have a taxiway leading up to it. It's kind of not much of a hanger, huh? That's a good way to look at it. Yeah. Do you still get the Santa Claus rally? Statistically, yeah. Today doesn't. Now, I would say that we did fight off the Fed sell-off really quickly. So if there's a glimmer of hope, that was interesting to see. If you look at a 5-minute chart of the market today, the rate came out, we were just down. There was no, and then all of a sudden, it like fought back throughout the day. I didn't look deeper to see what that was, but that was interesting to see, right? Yeah. But do we get a Santa Claus rally that takes us positive for the year? Now you know. Come on, we're out of time. That's just not gonna. That's just not gonna be the case. Am I ever gonna get your Albertsons dividend? You got to wait till next week, apparently. So I think that's ridiculous what they did, but there's nothing they can do about it at this point. When you have a court order, you're not going to break that one. How many years has the S&P been negative, and what happened next year? You could use the research site for that, could you? I don't see why not. Let's try something real quick, since I'm a little caught up on the questions. So we're going to say, how many times has the S&P been under 0% in a year? I don't know. Let's go like this. I can't put 0. So how many times has it been less than 0.01? I can do that. And then what it would show, or what it should show, is like I just showed a second ago, where you have, there's going to be a lot of them, where you have how many times it was actually lower, what happened the year before, and what happened the year after. So can that be done? It can be done. Can I pull it up fast enough? What did I change? Let's try it like this. Real quick, hang with me. SPY less than minus 1, just to try to get something up here. Years, look back 35 years. And I think I got what I need there. Less than minus 1% years. Okay, we'll let that think for a second. But can you find that? Absolutely. Yeah, that's one that I would. I didn't realize I can't put a decimal there, though. So, to think about that one. You think you're getting another rally to lower highs, or things aren't going to get better? There you go. And a lot of people are already projecting. You saw BlackRock today. They said the same thing. They said the recession is going to happen, you know, next year, and it's not priced in to the overall market. So naturally, that's a very negative thing to say. And so that's it. I should have swapped that stock pick, huh? So the Roku on a complete opposite end of that SQM, but yeah, kind of got it handed to me that year for that one, huh? I wonder if we can figure that quick recovery came as a result of the market getting what it expected out of the Fed. Yeah, there's a way to look into that. I didn't have time to do that at the moment, but there's a way to share that. Remember I shared that with you before, how the one newscaster, actually, we followed it second by second when he asked the question, and the one newscaster getting the wrong answer caused Jerome Powell to say something that he wasn't going to say, but he was trying to sound tougher, and it pushed the market down. Was that two announcements ago? Yeah. Yeah, I don't know. I have to think about that. Like, what would it be? That would be something to look at. I don't have anything for you at the moment, but it can be done. Yeah. 93% of options each week are on UVXY calls. It's legit manipulated down every week. Not 93% of all options out there. I think you're saying on the UVXY. And you know why that is, right? It'd be a little bit dangerous to go the other way. Oh, did I? Well, I'll do that. Let me look back then. But if I did that, then yeah, I must have it here. I just keep basically a rolling list of slides. That's why it seems kind of unorganized. Okay, anyways, I'll wrap it up there, and I will look into that. I will wish you a good rest of your day, and thanks for hanging out with us. I know we're, small fish in a big pond, a really big pond, but I appreciate that. You guys enjoy the rest of your day, and we'll see you tonight, right? Gonna come hang out tonight? Just real quick? Yeah, you can do it.